Morning, market chameleons and Dimitri Pargamonic. Thank God it's Friday, buddy. Last trading day of the week.
Yep. Good morning, Will. How are you doing?
Awesome. What do you got on tap for us today? Anything
Very exciting. I think what we'll do is we'll take a look at some interesting analytics on Coinbase, some comparisons, and we'll talk about yesterday there's a new SEC chairman, and I think that it's kind of important just to see his background and how that may impact, stocks in Wall Street going forward. We'll take a look at pre-market trading, what's going on in pre-market, and then if there are any questions, I'll take those along the way.
All right, cool. Let's start with the disclaimer. Let's
take a look at, why don't you put up the disclaimer first of all. So before we get started, everyone, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer.
Excellent.
Take a look. Let me share my screen real quick. Let's take a look first. What's going on in pre-market hours. Then we'll take a look at Coinbase and talk about, if the new SEC chairman, which I think would, we'll get some interesting insights from there. So this is the pre-market report. Stocks trading in the pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's first take a look at what's going on in the higher market cap stocks. So I'm going to use this filter to look for stocks with the market cap 20 billion or higher. So here we got 20 that made the percentage gainers list, 2 on the percentage decliners list. From that perspective, slightly bullish bias at the open. Just kind of going on top of the list. This looks WIT reacting to news. Yesterday up 6.1%, not trading that much though, 21,000 shares in the pre-market hours. I'm going to just kind of scroll down to Coinbase here. So it's up 1.9% in the pre-market hours. And I'm going to just talk about it a little bit more and make a comparison of Coinbase as an exchange to the other more established legacy exchanges out there, and just take a look at their valuations and get a comparison and see the optimism that's being built into, cryptocurrency exchanges. And keep in mind, Coinbase is not the only exchange out there. There are a lot of other exchanges that are trading cryptocurrency. And right now we see as of yesterday's close, approximately $60 billion market cap right now on Coinbase. I'm going to just go to the unfiltered list, take a look here. It looks like we got some small cap stocks gapping up in the morning. MTSL up 94%, 12 million shares trade in hands. That's a market cap of 12.9 million. Looks like that's a merger that they're up based on merger news. GFN up 56%, trading 216,000 shares in the pre-market hours. That's a $367 million market cap stock. That looks like they're also subject to an acquisition, so up 56%. If there are no questions on the pre-market, anything in specific, Will, I'm going to kind of move on.
You can move away.
All right. And I think one of the things I'm going to just show you really quickly. So yesterday, it looks like Gary Gensler. Is that name familiar to you at all, Will? Gary Gensler. So
only he's the new chair of
the
Fed, right?
SEC.
Oh,
yeah,
and all right.
The SEC. So Gary Gensler, I just recognize him because he was a professor at MIT, and in MIT, he taught a class on cryptocurrencies. You could actually go on YouTube, look him up, and very smart guy. He kind of explains it in a way most people, I think, will understand. And he talks about the at least the videos I started watching were on the blockchain and on the Bitcoin. And he kind of goes step by step and tells you how the thought process behind it, the layers, how it works. Very interesting, you know, that he was chosen because I do feel that, at least for the cryptocurrency and for the blockchain technologies, I think this is good news because he kind of he understands it. You know, he understands it really deeply. And he taught classes, and people coming out of MIT are one of the biggest driving forces behind this growth. So when you're talking about cryptocurrencies, blockchain technology, coins, you see a lot of people coming out from MIT involved in that. So I think from that perspective, it's pretty good news. You know, if we look at it from that side, I think he also at one point worked at Goldman Sachs. He also worked for the Commodities Futures Commission. So he came from a regulatory background as well, dealing with swaps. But if you go there and watch his videos, and if you want to learn about blockchains and you want to learn about Bitcoin, it's out there on YouTube. You know, he's standing, teaching a course at MIT. You could listen to the lecture. You actually hear the interaction of MIT students. He goes back and forth, asking questions. You know, they ask questions, he answers them. They participate. And if you want to learn, that's a good way to learn. So I think, at least for people in that space, it's a good reason to be happy with the SEC chairman. So just wanted to point that out really quickly. So moving on, if there are no questions, I was going to take a look at Coinbase. And for people who don't know, I think everybody knows by now what Coinbase is, right? It's just an exchange where, you know, you could go get an account and buy cryptocurrencies and sell cryptocurrencies. And they made it very easy. If you want to buy Bitcoin, Ethereum, any of these new tokens, they made it pretty easy to do that. And we're looking at right now, what, $65 billion market cap on Coinbase. So let's just put that in perspective. You know, there are other exchanges out there, right? We got NASDAQ, we got CBOE, we got the ICE exchange, which owns the New York Stock Exchange and a bunch of other exchanges. So how does this market cap compare to theirs? So that's what I just want to take a look at really quickly. So I'm going to go here, peer comparisons. So we see here Coinbase 60 billion around as of yesterday's close. We don't have any right now. We don't have any data yet on their revenue, gross profits, operating income. You know, once they file their first report with SEC, then we'll get some more insights on that. But let's just compare, at least from market cap perspective. So let's look at CBOE. So here's CBOE market cap, 11.1 billion versus Coinbase 60 billion. Remember, CBOE has they got an options exchange. I think they have several options exchanges. They have some proprietary indexes like the VIX, proprietary products. They, besides their indexes, I think that, do they have a futures exchange, Will? And they bought the BATS exchange, so they own the BATS exchange, so stock exchange. So you got pretty big exchange there, right? CBOE. We were members of the CBOE at one point. Let's take a look at, well, you can't hear me?
Yeah, I got you. Can you hear me?
Oh, yeah. You just weren't responding. So this is the ICE exchange, 67 billion. So ICE, really close. Let's take a look at NASDAQ.
I think the ICE actually is partnering with a venture capital firm to buy a digital asset, exchange.
Okay. So these exchanges might start moving into there. Look at this market valuation. You know, these are legacy exchange. They've been around for a long time, regulated, have a lot of listings. You know, this NASDAQ, obviously, electronic exchange, has a bunch of listings. Coinbase is listed on the NASDAQ. 26.4 billion market cap, NASDAQ. Coinbase, 60 billion. CBOE, one of the biggest options exchange out there, owns a stock exchange, the BATS exchange, owns the BATS options exchange. 11.1 billion, owns the VIX. 11.1 billion, Coinbase, 60 billion. So this is just kind of putting things in perspective, you know, how much enthusiasm there is out there on this type of technology and cryptocurrencies. And by the way, Coinbase, if you compare the amount of listings, right, just compare amount of listings, NASDAQ has way more listings, right? Way more stocks traded on the NASDAQ. Companies that are listed on the NASDAQ have to pay NASDAQ a fee. NASDAQ also charges a fee for their data, right? So anybody who accesses NASDAQ data has to pay a fee. Market makers pay a fee, transaction fees. So when you start comparing it to Coinbase, that's pretty extraordinary, right? What we're seeing right now. And by the way, Coinbase, you know, I'm looking right here at like 3 of the major exchanges. Coinbase has a lot of competition. It's not the only one doing this. You know, they're one of the biggest, but there's a lot of exchanges out there. So just keep that in mind. It's a lot of enthusiasm, and it's probably because of the things that are happening. People involved in it are seeing that the future looks bright. You know, the technology that being worked on today will change how we interact financially and on the internet going forward. But just wanted to bring that about. And I think there's one other company here. Here's just to kind of talk about how much enthusiasm is being built. I think we talked about this one. So here's Riot. This is Riot Blockchain, and they're a mining company, right? Like 4.2 billion. I think since the Coinbase came out, this started coming down, maybe because there's now more options listed on the exchanges that you could participate in this technology. But look, $4 billion market cap. And I'm just going to do this one more time because we did this before. I'm looking at their financials. You know, let's take a look at their quarterly.
So as you explained yesterday, if they're a miner, they're actually validating all the blockchain for Bitcoin, correct?
Yeah, exactly. So the way miners work is that for these tokens, cryptocurrencies to work, they're based on a ledger, a blockchain. So somebody needs to keep that record, right? So that's important. Without it, it doesn't work. And it has to be decentralized. So miners are kind of the validators, the record keepers, you know, of the coins. And for doing that, because they run these systems, you know, they own servers, they create these they run these complicated mathematical problems, and then they create these ledgers that are stored there that cannot be changed. Anybody could come and see them. It should be transparent. And for that service, they are paid in that native currency, right? So if they're mining Bitcoin, they'll get paid in Bitcoin. You know, if they're mining or validating Ethereum, they're going to get paid in Ethereum. And they do have, you know, they have to be up all the time, right? They do have kind of an obligation, or they're going to get kicked out. So that's what they're doing, is basically providing that service of blockchain, you know, ledger keeping. But when we look at, you know, the market cap of these stocks compared to, at least here we have some insights of their revenue. So here's their revenue, total revenue, last 4 quarters. So last one we have $5 million in revenue. the cost of their revenue 2.1 million, so they grossed $3.2 million in gross profits. Operating expenses, so now we're talking about, you know, their salaries, marketing, whatever goes into their normal operating business, $4 million. So then you got an operating loss of 800,000. So they made money somewhere else, looks like, besides their operating income. You'd have to go take a look, but you could see here that they're not, right, even based on their revenue of $5 million, a 4 billion market cap is like, that's incredible. Look at the price to sales. So that's how much enthusiasm is being built into this sector. So just trying to put things in perspective, you know, like what's going on here. And mostly it's technology, but there are other ways to play it. I think we mentioned one yesterday. Here's NVIDIA. So NVIDIA creates chips that they sell to these miners, right? So besides that, I mean, I think they make chips that go into lots of useful spaces, especially the gaming, but they also make these chips that the miners use to mine those coins. So if you look from different perspectives, there's other ways to play it if you want to be in that space. And really the argument could be made, if this cryptocurrency, if it comes to fruition and it does change the internet and there's going to be another internet 2.0, the entire market will benefit, and I think overall, right, the entire economy. So if there are no questions, I'll just move on, maybe cover some earnings. Well,
yeah, that's great.
All right. Let's see what's coming up on the earnings front for next week. We'll see. I'm going to use a filter to look for stocks that trade at least 5,000 option contracts or more on average per day. And then I'll go to the full report. So this is a list of stocks that are expected to report earnings in the next 2 weeks. We're going to take a look at it from the perspective of how the options are pricing in the earnings move compared to historical moves. So here we got KO trades 55,000, over 55,000 contracts on average per day. They're expected to report April 19th before the market opens. As of yesterday's close, the straddle was pricing a move of 2.7% in either direction. So, and keep in mind when we're talking about implied move, we're looking at the price of the straddle, buying a call and buying it at the money put at the same time. So you're paying premium for both. That means the stock needs to move up or down by a big enough percentage to cover the cost of that premium. Okay, so that's the implied move, 2.7%. So how does that compare to historically? How did the stock move after reporting earnings? So here we could take a look at the last 4 quarters, and we're going to look at the absolute move in either direction, take the average. So the average was 1.6%. So you could see that's below the implied 2.7%. If we took a look at the last 12 quarters, on average moved 2.8%, which is kind of in line with the current implied move. So we're 1.1% above the 4-quarter average. We're a little bit slightly below the 12-quarter average. What is the highest move it made in the last 12 quarters after reporting earnings? That's over here, 8.4%. So that's the high move on KO in the last 12 quarters. If we want to see, well, how does this premium compare to historical premiums? You know, these are the actual moves, the realized moves. What about the straddle? You know, where was it usually priced heading into earnings? So let's take a look in the last 4 quarters. So in the last 4 quarters, on average, straddles were implied in move of 4%. In the last 12 quarters, straddle implied move of 3.1%. So we could see here right now we're below those averages, right? Below the last 4 quarters and the last 12 quarters. Let's take a look at IBM. That's expected to report April 19th. Straddle's implying a move of 4.9%. How does that compare to historical moves? So let's take a look first at the 4-quarter average. In the last 4 quarters, on average, the stock moved 4.9%. In the last 12 quarters, the average move was 5.4%. So we're in line with the 4-quarter average, a little bit below 0.4%. The 12-quarter average, the high move on that stock, 9.9% in the last 12 quarters. How does the premium compare to historical? So Straddle right now pricing in 4.9%. Last 4 quarters, Straddle on average was 5.5%, and last 12 quarters, 4.9%. So we're in line with the 12 quarters, a little bit below the last 4 quarters. Let's do this one, UAL, and then we could go take a look, deeper dive into one of them. UAL, that's expected to report April 19th after the market close. That Straddle's implying a move of 6.1%. So how does that compare to the historical moves? So let's take a look. 4-quarter average, 5.9%. 12-quarter average move, 5%. So we're, in line with the 4-quarter average, 1% above the 12-quarter average. How about the historical implied moves? So 4-quarter average implied move, 6.8%. 12-quarter average, 5.6%. So a little bit below the 4-quarter average, a little bit above the 12-quarter average. The high move on that stock, 10% after reporting earnings. So having said that, if there are no questions, well, I could maybe go to IBM.
Oh, yeah. I need just, Robert, I need clarification on what percent you're looking at. Robert was asking, does Dimitri have a percent that he will be look at to make trades on stocks on the earnings page he is talking about?
Well, it's not really, besides this, I start looking deeper into it to see, if it's close, and I think, it's a buy, or if it's a sell, I'll go look at other circumstances, but this is just kind of a starting point. I wouldn't use just one metric to make a decision, but I do use it as a starting point to kind of go and develop my thesis for the trade. But is there like one magic percent? No, because then you just have to go there and check all the circumstances around it. But this kind of just starts pointing things out to go, deeper into the research.
Excellent. And Mike McRae had an option related question early on that I wasn't able to get to, but before you jump to your deeper dive, he was asking, what is the risk of assignment prior to expiration when the underlying price of the stock is way above your short strike on a debit call spread?
So the risk of an assignment before expiration?
Yes.
Is that okay?
So I would say the risk is definitely there. You could be assigned at any time, right? That is the risk.
You could, yeah, you can. I mean, anybody could get assigned, at any time, because it's up. If you're short an option, that's always up to the buyer of the option. He always has that option to exercise that option. And when he does, the OCC has a formula who gets assigned on it. So if there's a lot of open interest, they have a formula to who gets assigned. If there's low open interest, your likelihood is going to be greater of getting assigned. But there's certain times that you're in greater risk of getting an assignment. And if we're looking at the calls, the time that you're at the greater risk of getting assigned is before the X date. So one of the things about options is that you have an option to buy the stock, but you're not entitled to any of the rights of stock ownership until you exercise it and convert it to stock. So if you own a call that's very deep in the money, no time premium left, it's very deep in the money, and there's going to be a dividend. Well, for you to get that dividend, if your call is essentially the same thing as stock at that point, where it's very deep in the money, for you to get that dividend, you need to exercise that call, convert it to stock, and then you'll be entitled to the dividend as long as you have it before the X date. That's the only way you'll get the dividends. You have to own the stock. Just having the call option, it's not going to entitle you to that dividend, unless it's like maybe a special dividend and the OCC makes a adjustment. But regular dividends, you're not going to get it unless you exercise it. So on the flip side, if you're short a call that is deep in the money and X dividends coming up that's big enough, then yeah, you got assignment, you got real assignment risk. The other risk is if it's a stock that's hard to borrow, right? I mean, I'll go, I don't know if I could go find examples right now, but it's the other risk is if a stock is hard to borrow. This is IBM. I don't think this is hard to borrow, but when you have a call that's deep in the money, right? Let's say, I'm going to go just as an example. Let's say this 100 call with 1 day to go, so it's $32 in the money. You could go further out, 60. Basically, this call is behaving already 1-for-1 with the stock. So there's really no time premium. Basically, the stock goes up, it'll go up 1-for-1 with the stock. Stock goes down 1-for-1 with the stock. So it's 100 delta call. So all these become an exercise candidate. Of course, we talked about the dividend, right? So if IBM happened to be paying a dividend, go next tomorrow, you would want to exercise it to get that dividend. The other risk is that if the stock's hard to borrow, when you look at a market maker, they against this call, they're short stock, right? So you're going to hedge this call by being short stock. But if you're short stock and it's hard to borrow, that means you're paying a fee, and you don't want to pay, and you want to stop paying that fee. You're going to exercise the call, basically buying back the stock you're short. It offsets, and you no longer pay the fee, right? So it depends on the rate you're paying on your short stock when you're long a call. So if you're short that call, you'll go in reverse, and you're going to get assigned. So that's just from the call perspective, because his question was about calls, right? Well,
yep, correct.
Does that help?
Yeah, I think that's super helpful. Thanks.
Right, and remember, we're talking about potentials of getting assigned before expiration, right? That means somebody has to actually exercise the call. At expiration, obviously, they'll get automatically exercised at expiration. But we're talking about the risks prior to expiration. So hopefully that helps out. But we're right at 9:28. Well, I don't know if I'll get to go deeper into anything right now. So unless you have any new questions, we could wrap it up.
All right. That was another great show, D. A lot of interesting commentary as always. You have a great weekend, buddy.
Great. Thank you, everyone. Stay safe. Have a great weekend. Hope to see you guys Monday.
All right. Enjoy your Friday, Chameleons. Trade in peace. Have a great weekend. Bye-bye.